Today is June 6th, 2025, 5:39 p.m. Japan time. The Nikkei Nigo closed at 37742 today, up 0.5% from the previous day. It's back to the same level as 2 days ago. The volatility index is at 23.56, gradually coming down. The P/E ratio has not changed much either. There have been some talk that BOJ could lead to stronger policies by US. Looking at the situation, I think we are entering a phase where the yen stretching. But with high interest rates and weak EPS momentum and stronger yen, it's hard for the market to go up. We are seeing selling around 38,000 yen because of the combination of interest rates and forex and EPS. Unless interest rate drops, it's hard to expect a breakout. Still, the market is not falling sharply either. After the Trump tariff announced on April 3rd, the market corrected down to around 30,500 yen, which may have cleared out many buyers. Now, there are a few large long positions, even though it looks like a good time to sell based on the news, and there just aren't many buyers or sellers, so it's hard to move. What happens is selling builds up, but buying does not, leading to small short squeeze. That's why the market is stuck in a tight range between 37400 and 37800 yen. We are in a range bound situation, not strongly bullish or bearish, even though there are a lot of negative headlines like conflict between Trump and Musk. The market is not crashing because there are not many long to unwind. If you look at the candlestick from the May 28, we've had a lot of bearish candle, but each day we go back to the previous day's range before getting sold again. Today we are seeing a big bullish candle, but it's uncertain how strong it will be. It's a tricky situation. How valuations, but positions are right. There's selling pressure, but no major collapse. Still, when you look at the overall trend, it seems like we are still in a downward move, but not taking a partial in range. Comparing with the US market is a bit smoother. The S&P is at 5939 points, and the VIX is 80.48, lower than Japan's volatility. US interest rates have slightly falling, and US EPS momentum is not weakening as much as Japan's, so Japan might be supported by the US for now. Gold prices are also high. Looking at the big picture, after Trump wins the election, we might see a new cycle with stock market and gold rallying again. But right now, it feels like we are in cooling off period. One thing to note is that Japanese stocks are more expensive compared to other countries. Also, Japan's interest rates are staying high. On June 20th, we have a primary dealer meeting and possible change to the government bond insurance plan. If long-term rates come down, valuation could get better. Also, if EPS momentum recovers, that would help too. For now, the strategy is to watch carefully and wait for the market to improve. That's all for today. If you enjoy this, please follow my content. Think of it like buying a long put position. See you tomorrow.